Hey there, property enthusiasts. Welcome back to The Property Spot, your go-to channel for all things real estate. If you're eager to stay ahead in the property game, make sure to hit that subscribe button and turn on notifications. You won't want to miss our latest insights and tips. Before diving into the trends shaping the real estate landscape in the second half of 2025, let's take a moment to understand how the real estate market functions. At its core, the real estate market operates on the principles of supply and demand. When more people want to buy homes than there are homes available, prices tend to rise. Conversely, when there are more homes than buyers, prices may fall. Several factors influence this balance. Interest rates. Lower interest rates make borrowing cheaper, encouraging more people to buy homes. Higher rates can deter buyers. Economic conditions. A strong economy boosts consumer confidence and purchasing power, leading to increased demand for homes. Government policies. Tax incentives, subsidies, and regulations can either stimulate or cool down the housing market. Demographics. Population growth, urbanization, and generational shifts impact housing demand. Construction and development costs. Rising material and labor costs can limit new housing supply, constraining availability and driving prices up. Employment trends. Job growth, particularly in tech and service industries, can stimulate local housing demand as workers relocate for opportunities. Migration patterns. Internal migration from expensive urban cores to more affordable suburban or rural areas changes the demand landscape significantly. Speculation and investor activity. When investors dominate a market, they can drive up prices quickly and contribute to housing bubbles. Understanding these fundamentals helps us make sense of the trends we're about to explore. Global real estate trends in the second half of 2025. As we navigate through 2025, the global real estate market is experiencing a mix of challenges and opportunities. Here's what you need to know. Number 1. Interest rates and mortgage dynamics. Interest rates have been a hot topic this year. After a period of hikes to combat inflation, central banks in several countries are signaling a pause or even slight reductions in rates. This shift is expected to make mortgages more affordable, potentially boosting home buying activity in the latter half of the year. However, it's essential to note that while rates might ease, they remain higher than the ultra-low levels seen in the early 2020. Buyers should be prepared for borrowing costs that are still above historical averages. Number 2. Housing affordability and inventory shortages. Affordability continues to be a pressing issue in many markets. Rapid price appreciation over the past few years, combined with wage growth that hasn't kept pace, has made homeownership challenging for many. Inventory shortages exacerbate this problem. In numerous cities, the number of homes available for sale remains low, leading to competitive bidding and upward pressure on prices. This trend is particularly pronounced in urban centers where land is scarce and construction costs are high. Number 3. Shifts in buyer preferences. The pandemic has reshaped what people look for in a home. Remote work has increased the appeal of suburban and rural areas, where buyers can get more space for their money. Features like home offices, outdoor spaces, and flexible layouts are in high demand. Additionally, sustainability is becoming a priority. Energy-efficient homes, solar panels, and eco-friendly materials are not just buzzwords, they're influencing purchasing decisions. Number 4. Technological integration in real estate. Technology continues to revolutionize the real estate industry. Virtual tours, digital closings, and AI-driven property valuations are becoming standard. These tools enhance the buying and selling experience, making transactions more efficient and accessible. Moreover, blockchain technology is starting to play a role in property transactions, offering increased transparency and security. Number 5. Investment trends and opportunities. Real estate remains a favored asset class for investors seeking stability and long-term returns. In 2025, several investment trends are emerging. Build-to-rent communities. With homeownership out of reach for some, professionally managed rental communities are gaining popularity. Commercial real estate recovery. While office spaces faced challenges during the pandemic, there's a resurgence in demand for flexible, hybrid-friendly workspaces. Industrial and logistics spaces. E-commerce growth continues to drive demand for warehouses and distribution centers. Investors are also exploring opportunities in emerging markets, where urbanization and economic growth present potential for significant returns. Regional spotlights. Let's take a closer look at specific regions to understand localized trends. United States. The U.S. housing market is showing signs of stabilization. While price growth has slowed, demand remains robust, especially in Sunbelt states like Texas and Florida. These areas offer affordability, job opportunities, and favorable climates, attracting both domestic and international buyers. Cities like Austin, Phoenix, and Charlotte are also gaining attention for their growing tech hubs and relatively lower cost of living compared to coastal metros. Meanwhile, some high-cost cities like San Francisco and New York are experiencing a shift toward renting, with younger buyers postponing homeownership due to affordability concerns. Europe. In Europe, markets like Germany and the Netherlands are experiencing strong demand, driven by low interest rates and limited housing supply. However, regulatory measures to cool down overheated markets are being implemented, which could impact future price trajectories. The UK, still feeling the aftereffects of Brexit and inflation, is seeing a renewed focus on regional cities like Manchester and Birmingham, where property is more affordable than London. Southern European countries like Spain and Portugal continue to attract foreign buyers, especially retirees and digital nomads, due to favorable visa programs and lower living costs. Asia Pacific. The Asia Pacific region presents a mixed picture. Countries like Australia and New Zealand are seeing renewed interest in urban properties, especially in cities like Sydney and Auckland, where inventory is tight, but demand is rebounding. Government incentives for first-time buyers are playing a significant role in market activity. In contrast, China is facing challenges due to slowing economic growth and regulatory crackdowns on over-leveraged property developers. Meanwhile, Southeast Asian nations like Vietnam and the Philippines are witnessing growing interest from foreign investors seeking emerging market opportunities. In conclusion, the second half of 2025 presents a critical juncture for the real estate market globally. With shifting economic conditions, evolving buyer behavior, and rapid technological change, it's essential to approach real estate decisions with informed caution and strategic foresight. Buyers should stay agile, leverage professional guidance, and prioritize financial preparedness. Investors must assess long-term macroeconomic trends, capitalize on undervalued markets, and be aware of regulatory shifts that may impact profitability. As for industry professionals, embracing innovation and staying attuned to consumer expectations will be key to remaining competitive. We hope this comprehensive overview empowers you to make confident real estate decisions. For continuous updates and valuable insights, subscribe to The Property Spot. We're committed to helping you navigate the property landscape with clarity and confidence. Thanks for watching, and we'll see you in the next video.